Okay, good afternoon or good morning and happy Friday to everyone that's joined us. Thank you for taking the time out to attend this webinar. We hope that you'll find it useful. So we'll be starting now. Today we're covering cost of sales accounting, so we hope that you find this useful. I'm joined today by Chris Tanner, founder and product expert. And for those of you that I've not spoken to before, my name's Helen and I'm Customer Success Manager here in our Bristol office. So I'm going to hand over to Chris now. This webinar will be recorded and we'll hope to get that sent out to you afterwards. If you've got any questions during the webinar, please type them into the questions box and we'll answer those as we go along. There'll also be some question and answer time at the end for any that we've not managed to get round to. So thank you again for joining us, and I'll hand over to Chris now. Thanks.
Thank you very much, Helen. So welcome to everybody. Today's webinar is going to be a fairly brief, but hopefully a good introduction to this concept of cost of sales accounting. So part of Brightpearl is an accounting module, and the reason that it is built into the sales and purchase order system is because of the incredible benefits that you get by having integrated financials rather than a separate accounting system. And the benefit of these integrated financials really stems from the concept of cost of sales accounting. And there are two types of accounting that retailers and wholesalers typically use. One is cost of sales or cost of goods sold, and the other one is what I call periodic accounting. There's other names for it as well, but we'll come to the reasons why these are called cost of sales and periodic shortly. So the concept behind cost of sales accounting is that the cost of sales, cost of goods sold effectively, the product cost, what you buy it for, on every single sale goes straight through to your accounting as soon as the sale is shipped. Some systems do it when it's invoiced, but Brightpearl actually records this when it's shipped. Whereas the periodic accounting method, it doesn't actually factor this cost of sale until you've done a stock take at the end of the month or the end of the period. So whether you're doing an annual stock take or a monthly stock take, you don't know accurate profit between those two periods. So that's the key difference between these two systems. I won't show you any periodic accounting today. I'll only show you cost of sales so you can see exactly how it works. We'll actually be doing some demos within a Brightpearl account as well. So let's take a step forwards and look at the two different types of accounting with some examples. So on the left-hand side here, we've got the cost of sales accounting. And let's say we've made a single sale for $10. So the sales revenue is what you've got in from the customer. And to make it simpler, we're not going to look at any tax in here. It's all going to be non-taxable product. So $10 sales revenue. The cost of the product, i.e. what you bought that product for, what you've paid your supplier, is $5, which pretty simple maths gives you $5 profit. But you can only see that profit because you know the cost of the sale at that time. Whereas the periodic accounting, you don't actually know the cost of the sale because you haven't done a stock take until the end of the month. So before you do that stock take, your profit and loss report, i.e. your accounting management reports, will be showing a $10 profit. It's only after you've done your opening balance less your closing balance, which gives you the amount of product that you sold or effectively lost during the month, that you actually see your profit. So hopefully that explains the concepts fairly well between cost of sales accounting and periodic accounting. So what I'm going to do is I'm going to show you exactly how this cost of sales accounting works in Brightpearl. We're going to create a sale and then we're going to see the cost of goods appear immediately as soon as that sale is shipped on the profit and loss report. Of course, this means that our profit and loss report is really, really useful at the end of the day rather than having to wait for the end of the month, send it off to the accountant and so on. So let's drop into a Brightpearl account. This is a completely empty account other than one product I've created just to demo the system. So we have a demo item here and I'm going to show cost and retail prices on screen. So we can see that the cost of this product is 5 and the retail is 10. Just to show you that the general ledger, which is the accounting database, is completely empty. And the general ledger being empty, of course, means that my profit and loss and balance sheets and so on will also be empty. So the first thing we need to do is to actually receive some stock because we can't ship it until we've got the stock. So I'm going to create a purchase order for one of these items. We have a demo supplier here. And let's pop one of these on the purchase order. You can see the cost price of $5 is coming through. Save changes. At this point we haven't affected the accounts at all. I go to receive inventory The unit cost is $5. I'm going to receive this one into stock, which gives me my first transaction on my general ledger. Reports, general ledger. You can see that my assets inventory has gone up by $5. If I go to the balance sheet, I can see that I now have assets here of $5. But it's not yet been invoiced. We haven't had the invoice from the supplier. So my profit and loss report is actually still empty because I've not actually sold this. All I've done is I've exchanged assets for a waiting invoice. I've not made any profit in the business. But the reason I added that $5 inventory is so that you can see what happens on the cost of sale, which is the point at which we record the profit. So let's sell the item. We have a demo customer. And let's add the same product to this sales order. And we can see that the sell price of $10 is coming through, and save changes. Of course, at this point we haven't recorded the revenue yet, so nothing's coming into the profit and loss report at all. However, when I invoice, this is the point at which the revenue of $10 will be recorded. The cost of sale won't yet be recorded, but the revenue will. Now that this sale is invoiced, we can see we've got an invoice reference up here. We go to our profit and loss report, and we can see we've got $10 profit. But we've not actually sent the customer any goods, which is why the cost of sales is still zero. It's only when we ship the goods that we know exactly what the goods have cost. And I'll show you exactly why that's the case in a second. It's around a principle called first in, first out, because as you receive inventory at different values, it'll be coming in higher or lower depending on when you receive it. So let's sell this single item at $5 and ship it. This takes me to the transaction where I can actually just click straight back through to the sales order. That's the quickest way to get back to the sale. So shipping the goods are actually what's called fulfillment. And those of you that are working in Brightpearl already know this well. We can either fulfill and ship later or fulfill and mark it as shipped right now. And it's actually the shipment that creates the cost of sales entry. So I'm not actually going to ship it. I'm going to create this goods out note, fulfill and ship later, which creates a goods out note. It's not yet shipped. You can see if I go back to my profit and loss report, because it's not yet shipped, we still just have $10 on there on the revenue. As soon as we ship this, the goods go out of stock, and I go back to the profit and loss report, and we'll now see that there's $5 on the purchases line. Effectively, that's the cost of sales line. And to be honest, in most accounts, I'd probably rename the nominal code purchases to cost of sales. So, Narendra, I'll get to your question in just a second about FIFO. So that is the basic concept of cost of sales accounting. I've received this sales order from the customer, I've shipped them the goods, and I've invoiced it. And immediately, my profit and loss report gives me everything I need to know about that particular sale. And without integrated financials in the same sales order system as if you're running everything else, it's very, very hard to achieve this accuracy and speed of getting a decent management report out. And of course, with Brightpearl, you can filter this by sales channel too. So you can pull out a profit and loss report at the end of every single day for every one of your channels. So that was the simplest approach in Brightpearl, showing you this particular sales order. If we move on to the next slide, it's basically saying how important cost prices are. So that $5 that we entered there was the $5 on the purchase order when we received the inventory. So you can receive goods into the system in a number of different ways, but this is the point at which it's absolutely essential with cost of sales accounting to have accurate cost prices, because it's right at the start of the process that your numbers are actually taken from. So in a periodic accounting system, you could leave it until the end of the month before deciding what your stock is worth. So although it's a little bit more effort up front to get the cost prices right, it makes the whole of the rest of the business more streamlined. So Bryce is asking a question there. I think I'll come to yours in a second too. So there are three ways of adding inventory into the system. I'll just show you these three ways at the moment. So purchase orders, stock corrections, and sales credits. Going back to the demo, we'll go to our purchase orders, recent purchase orders. We saw the way to receive those goods were literally just by opening up the purchase order and clicking receive inventory here. because this is now fully received, I won't be able to receive any more on this particular purchase order. The other way to add stock is products, add inventory. And the reason we give you a cost price on this screen here, what does each item cost you, is because of the importance here of the cost of the product. So in this case, if I add one, again at $5, we'll see that go into stock. I haven't put a reason, but that's okay. So that next time we go to our balance sheet, we'll see again $5. But note, of course, that $5 came in before we shipped it, and now we've got another $5 in. So that's another way to put stock in the system. And then a sales credit uses the actual cost from your cost price list, your default cost price list. And I'm going to be coming back to the concept of default cost prices pretty regularly. So just so you know where that is, if you go set up purchases, purchase settings, the default cost price list here is really important to check, and you've got that right. So again, Jonathan's got a question coming in around what if prices aren't known until the vendor invoice is received and items are received before you receive the invoice. That's a very good question, and I'll show exactly how that works in one of the slides. I don't believe it's the next slide. It's not, but we'll come to that because it's an important concept. Okay, so let's just introduce the concept of first in, first out. From the questions that are coming in from you guys on the chat, I think you're pretty familiar with what we're saying here, so I'll move through this quite quickly. First in, first out is essentially where the cost value that goes onto the cost of sale transaction is the cost of the oldest inventory. And to show you how that works on a little slide, I'll move through this quickly because you can watch it in more detail on the recording if you like. You receive on day 1 10 items at $10. On day 2, further 10 items, but this time the price is $12. So when you've received the goods into stock, you've got 10 at 10 and 10 at 12. On day 3, you sell 2 of those items, and the cost of sale for that transaction is going to be the cost of the oldest inventory. So that's the $10 price. You can see that the day 1 inventory is being sold, which leaves in stock 8 at $10 and 10 at $12, because we're using 2 at 10, so the cost of sale is $20. On day 4, we sell a further 10 items, which consumes 8 at $10 because we're doing the oldest inventory first, and then a further 2 of your $12 stock. So 8 times 10, 2 times 12, 104 cost of sale. So that's the concept of first in, first out. And Bryce, or in fact Narendra, you're asking, are there any plans to provide average costing as opposed to first in, first out? No, there aren't. Brightpearl is just first in, first out at the moment. And we don't really have any near-term plans to, but we're always listening. So if that's something that's a requirement for you, then make sure you let our product team know. Okay, so we've seen that. I'm just going to ask for confirmation that you can hear me, because GoToWebinar has just told me that my audio connection has been lost. So if someone could pop a, yep, great, good stuff. Thanks all. Okay, so audio connection is still all good. Great, so let's move on to the next slide. How does cost of sales work with purchase orders? So we saw there a very simple goods in transaction where I received that item at $5 and it increased the debit by $5. And the cost of sales is where effectively it reduces the assets. So you're selling something, you're reducing your asset code. Essentially, this slide is describing what I showed you a minute or so ago. If we go back into that purchase order, we haven't yet received the invoice, which is to one of your earlier questions, what happens when the value changes? So here's that purchase order. There's a transaction in our general ledger, which is now starting to look a little bit full. There's a few transactions coming through here. This first one is increasing the assets. It's a debit to our assets because we've got goods in. So that's for a purchase order 1. The second transaction here was the sales invoice, SI, which records $10 of revenue. The third transaction is a cost of sale transaction, which is actually selling it, and that was on sales order 2 again. And then the fourth transaction is a further $5 of stock coming in. So what happens when the goods actually are invoiced at a different value from which you've received them? So here we've received $5 on that first purchase order, but perhaps they send us an invoice later for $6. I mean, this particular slide shows you that we received them at 10, but the invoice comes in at 11. So somehow we need to do something with that $1 to figure out where to put it properly. So just a quick point, for those of you on the webinar asking, are there plans to introduce certain features? That's probably questions that we're best directing to our product team. This webinar today is showing you what Brightpearl does at the moment to help customers understand exactly the concepts of cost of sales accounting. So probably best work with Helen after this webinar, and we'll work with the product team on that. Okay, so back to this purchase order where we've received the inventory at $5. Let's open it up. But we've received the invoice at $6. So I've not received the invoice yet. We actually received the piece of paper. We edit our purchase order to make sure that it matches the invoice. So I've put that up $1 to $6, and then I go to receive invoice. I put an invoice reference in here, and then I'd receive invoice. But before I do that, I'm just going to show you the importance of this tick box here. And we know that cost prices are really, really important. And the next time we create a purchase order, it makes sense for us to create that purchase order and receive the goods at the last price paid, which is the most recent price, which is why I've got this tick box to update the prices on the cost price list. So we'll receive the invoice, and we're going to look to see where that $1 has gone. Let's go and have a look at our general ledger. And here we can see that there's $1 being transferred across to our purchases, our cost of sales account. And the reason that's happened is because the goods are always going to end up on the cost of sales account at some point. If they're sold immediately, they transfer, or the value transfer to the cost of sales account through the shipment of the sale. But if a purchase invoice is received at a different value from the goods in being received, we don't know whether those goods in have actually been sold yet, partially sold, waiting, allocated. They could be anywhere in the sales process, and affecting the value of that is very, very complex and potentially changes your month-end reports. So what we do is we actually put any deltas here or any differences straight through to the cost of sales account, which is exactly the same as it would be if you'd actually sold this. The only difference is there's a slight time lag perhaps, but generally that time lag, if you get your cost prices right, is not great. So let me just switch back to that slide. I don't think the next slide shows you exactly how it works. No, it doesn't. So essentially, I'm going to let that sort of sink in a little, and I'll probably run another one just so it's really, really clear. So let's create a new purchase order. And we're going to have part again, and we're going to receive it. You can see how $6 has now been brought in from the cost price because the cost price was updated. We're going to say receive it at $10. So the goods in will come in at $10. Receive inventory, unit cost of 10, submit. Reports, general ledger will show us the single transaction here of $10. We now go back to the purchase order, receive the invoice at $11, go to the general ledger, and we can see that that 1 has been transferred across onto the cost of sales account. If we go to our profit and loss report, it'll be slightly prematurely recording this profit, this delta, but that's generally well worth watching because you can actually drop into that, drill down and see exactly what's going on. So whilst I have that general ledger open, a few of you might have been looking at the stock received not invoiced line here. Because you've received the asset when the purchase order is received, you have to record it in your ledger somewhere, but you've not received the invoice yet. So that's why we have this balancing code. And it's actually when the invoice is received that it gets cleared against that particular account onto the creditor's control account, effectively your accounts payable. So I'm going to probably look through a couple of questions here. They're coming in fairly thick and fast. So Patrick's asking, how do you treat stock corrections without affecting cost prices? So the stock was never there in the first place. So I'm not entirely sure what you mean there, but let's tackle that. So you're going to do a stock correction without affecting cost prices. You could put zero value stock into the system, So say you just find a box under the stairs, you don't know what it cost you, you don't know whether there's going to be a purchase invoice for it, you just found this item, or perhaps even it was a gift. You can either choose to receive that at 0, so you could products add inventory, so you could create a goods in effectively, or a stock correction for this item. You just found it under the stairs, but you didn't pay for it. However, that means that your profit and loss report is going to show 0 cost of sales when you actually sell that item. And that's just something to be aware of. That's not something I can say this is the right way, this is the wrong way. It's up to you and your own personal business decisions whether you want to attribute a cost to that particular item you found under the stairs. So have a chat with your bookkeeper or your accountant about that. So you're also asking, Patrick, on FIFO, are there any plans to have a manual allocation system overriding FIFO? There isn't, so Brightpearl's always going to be running on FIFO. As soon as you break FIFO, you're starting to talk about batch allocation or specific serial number allocation, which is not something that Brightpearl's tackling at the moment. So Narendra's asking, you're buying and selling used items, so you're buying items at different prices, FIFO makes the cost jump around. It does, that's right. So Brightpearl is really a product, well, it's a system for merchants who sell finished products and where that product is fairly consistent in pricing. If your prices actually, or if your products actually vary so much, it might be worth creating different product lines such that you can actually choose which product has been sold. Whilst there's slight downside in your database gets a little bit cumbersome, you're creating products that are never going to be subsequently sold again, it's probably the best way around getting very targeted cost of sale prices. Or you could move stock between warehouses, but that's a little bit more complex. Okay, Joyce is asking raw materials. So you buy some raw materials from your manufacturer, you have an invoice cost from the manufacturer in addition to other costs that cannot be allocated from a purchase order by product. I think I understand what you mean, and I think that's related in some ways to landed cost. So you're paying your manufacturer or you're paying your supplier for the raw cost of goods, and then there are going to be additional costs to get that item to you. Those costs are probably going to be recorded elsewhere in the system. And that's the reason why the cost of sale, or the cost price you put on your goods in Brightpearl, is the raw product purchase price. It doesn't include shipping and so on. So just to show you exactly how that works, I'm going to create a new purchase order. Let's use the demo supplier again. And we're going to have some parts in here. The product is going to come in, let's make it $10 for easy maths, but then we're actually going to add manufacturing costs. So assembly cost, and you could add perhaps delivery charge, and let's say delivery is going to be $20 and assembly is going to be $2. You can choose whether you actually bundle the costs here into your asset. So in this particular scenario, if we're actually just buying one item and it's going to cost $20 to send to us, then that's a very expensive item. You've doubled the cost of the product. But to actually record that in the cost price of the item, you'd have to double that and remove your delivery line. But you probably don't want to be doing that. Most businesses will want to record the cost price there and then keep the delivery as a separate line. And you'd actually choose a suitable nominal code here, freight and shipping costs, and you'd choose another purchase code here. Let's call it subcontract, or productive labor is probably a good one there, a direct expense. And let's just make these non-taxable to make the maths easy. So there you can see the cost price is just $10, and all these ancillary charges are going to go elsewhere on the profit and loss report because they're not direct cost of sales. That's probably better for your bookkeeper. Have a conversation with them around how you want to run your specific business, but this just shows you in Brightpearl how that process would work. When we receive the invoice against this, we'll only receive $10 of inventory, and the $2 and $1 will go elsewhere on our profit and loss. So if we go and see our profit and loss, note that because it's an asset code, it won't show on your profit and loss until you've sold it, but these two will. So we'll see a little bit of information on the 6,000, a little bit of information on the 5010 on our profit and loss report. So here, for example, there's our sales, there's our cost of sales, here's the freight and shipping costs at $1, and there's our productive labor at $2. So choose where you want it to appear on the profit and loss report and when. Okay, so where again is this setting that is going into the correct account? Okay, so Bryce, you're asking, how do we know which account all of these transactions are being made into? That's a good question. So the cost of sales, this 5,000, I'm actually going to rename it now because I don't like purchases. I'm just going to go into Chart of Accounts, and I'm going to my purchases section. I've got 5,000 here. I'm going to call it cost of sales, which makes, or cost of goods sold, makes much more sense. That's just going to come in a second. And if we now go reports, profit and loss, we'll see cost of goods sold. And the cost of goods sold comes from the specific product. So if I really wanted to break down my business into different types of profit, for example, I could create further cost of goods sold accounts for different product lines. So, wrong screen, where are we? Accounting, Chart of Accounts. We're going to create a new cost of sales account, and that one's 5,000. Let's call it 5,001. Cost of sales, there's one frames. So say I'm selling bike frames. Let's just give it 5,001. And that's all we need to do here. What I'm going to do is I'm going to edit the product and show you exactly where that pops up. So if I search for my product part, open up the product, in the Prices tab on the right hand side here, you can choose your cost of sales account on a per product basis. So let's say that from here forwards, it won't affect any retrospective transactions. From here forwards, I'm going to assign cost of sales frames. You could associate a relevant sales code as well, so you could pair them up. You could have a 4001 that matched a 5001. And similarly, you could actually create different asset codes. So let's say we're going to call this finished goods. These come from the product. And next time I create a purchase order, we'll see that it's actually assets of finished goods that appear when I choose part. So if I choose part here, you can see that 1003 finished goods is chosen for my asset code. And note that I can't change this. That's because generally people don't fully understand cost of sales accounting, and while this was editable, people kept changing it to a 5000 code, which is why we don't let you change the account code for stock or inventory items. You can change the account code for non-stock items. So here, for example, you could choose a different 5000 or 6000 code for a delivery. So that's where all the nominal codes come from. They come from the actual product on cost of sales. So when that demo item ships, we use the 5001 code that we saw, that we just created. There's also the setup value in purchases here for the default cost price list, which is important to remember as well. Okay, so there's a whole load of questions. It's a popular topic. How are we doing for time? We've probably got another couple of minutes, so I think that's okay. So I'm going to read a couple of these, see which ones I can answer now. So Jonathan's asking, the value of your stock on hand is not landed costs. Absolutely correct. So the value of your stock is the cost that you've paid the supplier. And actually, at the end of last week's webinar, we covered landed costs. So last week's webinar was the intricacies of importing. So well worth having a look at that when we get it online. We haven't published it yet, but we'll send you an email when we have. And I believe there's also information on our support documentation around landed costs. So Jonathan's asking, can you change it if you're on periodic method? Can you change to cost of sales accounting? Absolutely. However, my last slide is what happens if you want to change. And it's particularly complex because you're going to have half of your inventory that's come in but not yet sold. It's going to be a very complex scenario of trying to figure out where your current position is and then doing some manual accounting transactions to switch. So whilst you can switch, do it very cautiously. And I'll show you where in the system you can actually do that. It's set up company accounting options. And here is where you choose cost of sale accounting, yes or no. Okay, so actually, Jonathan, what you say you're asking is, can you change the nominal code on the purchase order if you're using the periodic method? Yes, you can. So if you're in periodic method, you can choose which nominal code is used on the purchase order. And in fact, just to show you how that works, I'm going to turn cost of sales accounting off. What this is going to do is going to create a data set that doesn't look consistent, because we started the demo on cost of sales and we finished it on cost of sales off. But this is just to demonstrate what happens when we create a purchase order with cost of sales off. So for our demo supplier, we're going to add that product again, the part. And note how, this time, the cost of sales, the 5,000 code, is being brought into the purchase order rather than the 1,000 code. But you can see that we still can't edit it. So what we'll do is we'll go to the setup area, and I'll show you how to make that select menu editable again. I believe it's in purchases. It's a while since I chose this. Nope, so it's probably in accounting. Let's try accounting options. You'll have to excuse me, I've completely forgotten where this setting is. But there is a setting somewhere whereby you can actually let the user change the nominal code when you're in cost of sales mode. I recommend probably having us for it. It'll be in our documentation somewhere. So there's a setting that lets you choose whether you can actually lock that or unlock it. Hopefully that's the right answer. I'm afraid I can't show you, but that's what goes on there. Okay, so Narendra is asking, do you do cost of sales account? Does Brightpearl do cost of sales accounting differently from drop shipments? Yes, that's a very good point. And let me just turn on cost of sales accounting again to show you how dropship works, because with dropship you don't actually receive the inventory. So let's turn cost of sales accounting back on. And to use dropship, I actually need to have connected products to suppliers. So let's select these products and we will set them to the demo supplier or supplier company and update. So now I should be able to dropship that item because it's connected to a supplier, and I know that supplier is on the cost price list and the cost price is $5, or it's probably $10 now. So let's create a new sale that we're going to dropship, and this will be the last part of our demo today. So we're going to the demo customer, we're going to add part, and sales parts all good. We're actually going to ask for 10, which is more than we have on hand, which is why I want to drop this particular product. So to dropship, I need the third option turned on in my fulfillment menu. So let me quickly go and turn on that feature. It's available for everybody. And if I go products inventory, inventory settings, and I turn on split or partial fulfillment, which also includes dropship purchase orders. So I'll save that. I'll go back to the sale from our recent sales list, open up order ID number 7, and we now have the third option here to partial or advanced fulfill, give a dropship option. And that demo item hasn't been put up on here. I think I might need to go and just ensure that supplier is on the right price list. So let's just do that. Once you're set up for dropship, it's all pretty straightforward, but this particular account wasn't actually set for dropship. So that's all good. And let's double check the product again, make sure it's got a cost price. Cost price 10, retail 10, yeah, that makes sense. Not much margin on that, I wouldn't really want to be doing that in real life. And let's go back into the order and then advanced fulfill. And you can now see that because the product is connected to the supplier, everything's lined up properly. I've got the second option where from the supplier it costs $10. This is going to create a dropship purchase order. And let's just do that. And we'll drop into that dropship purchase order. And where a normal purchase order is the asset code, because we're receiving the invoice, on a dropship purchase order, you can see this is set as dropship. It's actually using the cost of sales code. So that will just go straight through as a cost of sales transaction. You can actually change it here as well. Don't change it to an asset code, of course, because you're not receiving the goods. But if you wanted to, you could perhaps have a dropship nominal code so you can see exactly what cost of sales are coming through from dropship. Good stuff. Well, thanks all for your questions. That was a quick whistle-stop tour of quite a complex concept, and as we've said, it'll be recorded, and I'll hand you back to Helen.
Thanks very much for that, Chris. Thank you all for your attention today. I hope that you enjoy the rest of your day and indeed your weekend as well. Just a quick reminder that next week we have another webinar which will be joined by Salman Malik, Brightpearl CEO, Gordon Baisley, Director of Product, and James Scott, Senior Vice President of Customer Success, and that will be our customer quarterly update. So I hope to see you all there. Please check your inbox for invitations to that, and also if you haven't received that email, just contact me at success@brightpearl.com and I'll happily send you the link to register. I look